Good afternoon, everyone, and welcome to Monday, January 9th, 2026, Trading Trends with John Salama here. Let's get right into it. Hope everyone had a very super weekend. Let's get right into the markets. There's stuff going on. Congratulations to the Seahawks. Called that. They were just so dominant all year. Well-deserved. Eagles will have to get their NFC title back next year and World Championship. All right, today it's a global day. We're going to make some moves. First off, I'm going to be dumping Staples with a profit, about 1.5% profit, and going to be getting into the airlines and regional banks' personal portfolio moves as per dictated through the Turtle trading system. Australia today, the bell of the ball here, the talk of the town. Australia, Japan, which I am in, a monster day on Friday. It continues today. They had a political election, I believe, over the weekend, and that market continues to shoot higher. Very glad to be in that. I've had some really incredible 4-5 weeks to the start here, unlike I've had in many, many years. So props to the Turtles and props to discipline and having a system. Canada, all 2% higher, 1.5 to 2% higher here, while Staples give back about 1%. It hit all-time high at Staples. We are in that. I'm going to get out of that as I see rotation underneath the hood. New all-time highs for, take a deep breath here, energy, dividend stocks, which we are in. We're also in XLA. We're also in XLP. It's a great system. You're in all these things as they go higher and higher, and it's just no resistance right now. So it goes higher and higher, basically, in layman's terms. RSP, the average stock. VEA, that's developed world. IJH is mid-cap. XLI are the industrials. You saw the Dow go over 50,000. EWJ, Japan, we already talked about that one, new all-time highs. And Mexico, new all-time highs. So there's a lot going on here. You don't have to be picking software off the ground on a 3% dead cat bounce, okay? Or crypto, which we'll look at as well. So first off, things here. Let me do the screen grab here. If you have a ticker or something, put it in. There are things moving. I was reading today, I think it was from Ritholtz Wealth, saying, the term of the year is HALO. Whoops, heavy asset light obsolescence. And basically, if you can't, vibe code it, if you will, these are how the markets are attracting assets, essentially. We started saying this at the end of the year. If it's on the periodic table of elements, if it's heavy and you drop it on your foot, you want to own it this year because we're going to have to build all this stuff. So it's that in a nutshell. I've been writing about it for, at least 2 months here. So we'll get to SPY in a minute, up 50 bips on the cusp of new all-time highs. NVIDIA back to that big 190 level since November earnings. I love to see that. Lets me know it's a little bit more risk on. NVIDIA up just 3% on the year. And year over year, it's up a monster 48%, though, going back from last February. Tesla up 2%. I am short the XLY, in which that is a major component. Amazon is offsetting those gains, though, with a flat day for Amazon. Microsoft up 2.75%, but down 15% on the year. Things been a dog. Micron down 2%, but up 35% in just 5 weeks. Extraordinary. AMD up 3%. Oracle up 10% today, but down 20 on the year. So very noisy, choppy with Oracle. It moves with the CDS if they're going to get, strong ROI back on all those whole, big data center builds that they're going to be entangled with. Broadcom up 4.5%, flat on the year. Apple down 2%, flat on the year. Snoozer. Palantir, this one's gotten smoked in the past week. There was a big unwind from, the military, the, defense stocks. And this has been a victim right on the front page. So Palantir up 6% today, but down 19% on the year. It has been a high flyer, up basically a third since last Feb. Meta up 3%, up just about 1.5% on the year. Silver, a big day, up 7%. I don't know if we're going to have a metals. We're going to look at the silver junior miners today. We've been saying from the chart perspective, not the turtles, but strictly through technical analysis, we were saying right around Super Bowl weekend, Friday or Monday, the metals are going to be looking ripe for pickup, and they're both strong here. We'll take a look at the chart. Taiwan semi up 2.5%. And as I said, gold up 2%. That one's up 17% year to date. Same as silver, 17%. Intel up more than that combined, 37% on the year, flat day. So as we get here, with what I'm assuming is a lot of hungover traders from a very amazing Super Bowl. But I enjoyed it. But, okay, so here, same thing. You really knew that this was up and away right here when we got a breakout from a former area. I'm targeting that 692 right there. I'd love to see that overbought registration at the same moment. I knew we weren't going back to 692 anytime soon. We actually peaked right around noon at 696, and they're taking it down a small bit here. VWAP at 693 essentially. As I zoom out, more importantly, so I still see in terms of the cycles here, I see a bearish distribution phase. Can you guys see that? Yes. Through right around Feb 18th. Don't forget, next Monday is closed for President's Day, Lincoln's birthday. The market is closed, so you're probably gonna have, obviously a lot less liquidity, I would think, Friday and then Tuesday, but we'll see if there's some catalyst behind that. Also, understand earnings are winding down. You do have Cisco Thursday, but there are inflation numbers and a job number because the government shut down. So we're having, I think, on Wednesday or some nonsense. I just stick to charts. But the SPY to me will be in bearish distribution phase through on or around February 18th. Last I checked, that is 9 days from here, or a week and a half, with a floor of about 675. I've been saying this is almost like it's programmed here. If you look at my cursor here, it's almost like the powers that be, since the week before Christmas, will not let SPY drop below 675. I know it seems cockamamie or doesn't make sense. You saw the same thing on IBIT, and then obviously, of course, it dropped. But right here, I'm seeing a strong wall of support at 675. I've been texting a couple traders about this. It also corresponds with right around a 40 RSI for SPY. So still, buyers in control. They're not going to let it fall too much. So as I said, it's going to try and find ground. We're still going to be tethered to that 690 area. I've been saying this for, I think, about a month now. We're going to be basically tethered around that 690. I'm still seeing those right around that 705 area for those new all-time highs, but I see it in the first week of March. So that is my roadmap here for the next week and a half. Some bearishness with that 675 floor. Somewhat straddled and tethered to 690, and then a break above 7,000 in early March. All right, boopity boppity boopity boop. Let us get into the big movers of the day, and it is international flare, Australia. This a new 52-week high. What do we got here? Yes, 52-week high, because the all-time high is back here from before the great financial crisis at $35. I love the catch-up trades. I believe in it. So do traders. They have algos look for this kind of stuff. I love that kind of resolve higher. Look at this chart in Australia. Haven't looked in this in a while. The same thing. That's what I'm telling you. Fractally here. You can do it on an intraday chart. I do it on Qs. You can do it on PDD stock. I don't really care what it is. Right here, a breakout from a former area. Look at the wall of resistance here at 2760 for Australia, going back from September all the way through to a week, 2 weeks ago. Right then and there, it's going to get jet fuel, okay? And it's not Australia with all the resources, commodity rich that they have. This is an area and doesn't have a ton of dollars in terms of a capital flow. That's a good area here. I understand why folks are flocking to it, not just buying SPY and holding on to things for old time's sake. Look at this. I love a lot of structural things here. A wall here at 27.5, right thereabouts. 200-day moving average, slightly going higher, but really not with much slope. And then boom, a break right there above 27.5 and hit 52-week highs right here, right now. We're talking to it. Congratulations, you Australians, on your kangaroos and your beer and your 52-week highs. This looks great. I think this will probably be, it did quite a bit. I'm actually a little bit surprised at just how strong it's been. That's a big move for Australia. It is a 28 cents ATR. I've been teaching you guys this. If you want to chase this right here due to the great looking candle, wonderful. Get in at 28.78. ATR is 28 cents. 2 times 28 is 56 cents. Get in right here. Knock yourself out. Once you're down 56 cents, or exactly last I checked, 2% stop loss on that, just get out. It's not your time, because the odds are it probably drops to 27.5. So that's a better way to get a better entry. And that's the way I would do that. Also, just seeing a little bit of a bearish divergence here. I don't like seeing new 52-week highs and not even a 68 on the RSI, so don't love that. Let's see where VWAP trades on this today. It is at highs as we speak, but something tells me you might get this opportunity at 27.5 in the next, I don't know, maybe a week or so. And if so, go for it, because to me, my full target is right around 20.5, to be honest. So I personally don't like chasing here, but they are flocking to international stocks today. Australia, number one. Number two, and I am in this one, and I'm so happy I am. Again, konnichiwa, all you Japanese folk out there, and konnichiwa, Yet again, I bow. That's a really good appropriation. 73 RSI here. This has not been this hot since mid-August here, and actually hit a wall of resistance right there for a little while, to be honest. But it still held 50 RSI for about 2 months later, and that marked an interim, short-term high here at 83, and you see higher highs, and just a perfect looking chart. And like I said, they had an election. I believe the Nikkei I was seeing during the Super Bowl was up, 5-6%, I think, at some point. So it was absolutely crazy. I was almost paying attention to that more than the Derek May turnovers. But this looks great in terms of cycles, a little bit more, believe it or not, for a bullish accumulation. I see this peaking this week just because it's getting a little bit too hot. We referenced this on Friday. This usually doesn't have multiple outside Bollinger Band closes. They actually pretty much mark them at like 2, and that's it. So this is the second one. Great looking candle. You're having confirmation. I'm glad I'm in it. I took some profits on Friday. I don't think I'm taking some today. I'm actually, like I said in the opening, going to take off Staples and going to be rotating that funds into airlines and the regional banks. There's a lot of back testing, a lot of looking at how the Turtles system is working. It's really because I've been very quick and disciplined going to each rotation, international, through yield, through sector. It's very hands-on. So I love it. It works wonderfully. And this chart looks, what can I say? Absolutely stupendous. Japan. So if you're in this, congrats. It's getting a little bit nosebleed territory, though. Probably in the next several weeks, this will probably drop to $86. But that's not now. Okay, and the number 3 thing there, buying another nation. I didn't do this, rigged or something. And this is actually the multiple standard deviation movers. If it was software, if it was crypto, if it was energy, I would have posted them. We don't spin narrative here. The only multiple standard deviation movers today, or I should say the top 3 non-correlated in terms of what the actual companies are, constituency in the ETFs, is Australia, Japan, and number 3, Canada today. Canada, the other 2 had highs. So Australia's 52-week high, Japan all-time high. Canada, a little bit of a very short-term catch-up trade in that they had their 52-week highs just back on January 29, just 11 short days ago at 57. Here we are knocking on the door. You see that W formation here. Really nice looking candles here in the past several days. Canada used to move 1 for 1 with barrels of oil, and you have Iran rumors that would other used to move exactly with crude, but not so much the case anymore. In that we're talking about international flow, and this is getting love. This Canada looks good, so a little bit nuanced here. I love entries under 55 even. Obviously, right here it's 55.91, and last I checked, 55.91 is greater than 55. But if you're able, my target's 57. So that's pretty much, this thing doesn't move massively. The ATR is 47. If you want to chase it right here, wonderful. That's 94 cents. So go ahead and knock yourself out. If you lose 94 cents on that, I'm looking at 55.91. It goes down to 54.97. You get out. It's not your time. It's probably more likely going to get to 50. Could you go lower? Could go up to 54.5, something like that. But I do like this here. A lot of good charts looking here, like I told you about. Be careful what we just said about Australia, Japan, Canada, chasing here or don't chase. This looks like it has a little bit more room, about another $1 or about another 1.5 to 2% for Canada. So I don't know what you're talking about. Just have to get that in there. All right, Canada up 1.6%. Nice job. Let's look at. There's only one loser today. One loser, and I'm holding it. But it's Staples, and I'm up on it, so I don't feel too bad at all. Staples down 1%, but look at this here today. That, my friends, is an all-time high for the Staples because you can't, vibe code a burrito or food. So there is a lot of, the algos are finding the same way that there was a tariff scare, so they flocked to Spotify and Netflix back last year and really went over position there. And then there are unwinds here. A lot of people are scared of the AI trade, sucking a lot of business model risk out of software. So what do? They go into things like, I know Walmart's basically a tech company now almost, but Walmart's the main holder or holding in Staples, and you can't really have Claude make lettuce for you. At least not yet. Although I think I did see that in the commercial yesterday. Okay, so Staples down 95 bips here. I do have an order to get out of my position here with about $1 gain or 1.5%. But like I said, with the Turtles, you're putting in a lot more as it moves in your direction. And I entered about here with about 84, 85 bucks. So, it's scaling in and pyramiding in and scaling out, as it were. Staples, just telling you on the chart here, it just got really, really hot. I mean, this is insane, that the consensus all year essentially is, okay, Staples are worth 80 and a quarter. And again, look at it here, breakout above this area just happened very recently with overbought. It's going higher. They don't care. It's going to go higher. You went in the fast lane, you're going 80 miles an hour. Do understand that. So that happened right there with a handle of 84. Where does it get sent to immediately? 88. So now this got a little bit too hot, in my opinion, hence why I'm getting out. And something with a little bit more, in my opinion, relative strength and lift, like the airlines and regional banks. I want to catch on that part of the cyclical part of the market instead of, Staples. They're not going to bid. Walmart's different because of the way they're changing their, technology there and their expenses. But, this is still a Staples basket, of course, Johnson or whatever it is now these days, Pepsi, etc. But to me, this looks like it might have a not so hot 2 weeks. I tell you where things are going and where they're not. This looks like, to me in the chart, this is going to about 84 bucks. So I just don't, feel the need to be in anymore. Not operating discretionary at all. The turtles basically told me to get out of this. This is almost dead money here on the day of an all-time high. And if it doesn't make sense to you, really go into Michael Covell's turtle trading system. It is wonderful. And meanwhile, as we speak here, this is under VWAP on the day. Overbought, though, as we're trying to unwind that overbought behavior, which we've been since mid-January, believe it or not. So absolutely crazy. The flocking to software. I saw some starts on the exit of software and went into the rise of consumer staples. So if you see the chart, it's almost a perfect inverse overlay. If you see this gap, how this went amazingly from January 8th, just a ridiculous return. It's almost the exact inverse chart of software. So if you think software is going to get a dead cat bounce, they're going to sell this to finance it. All right. Top three gainers of the past 5 days. Let's go. Top three gainer of the past 5 days. Number one in your hearts over the past year, if you remember from the Friday show, the junior silver miners. They're back. Oh boy, they're back, and they're back in a big way. Up 9.5%. Over the past 5 days, the average of almost 2% a day. Today, up 5% right here. You see this W pattern right here. It looks like it's going to take that out soonish. What do you say? There's nothing tactical, there's nothing wrong in the story of silver, of the metals. They just got super, super hot, and they just had to take a break. Right here, I was telling you, like I said, Super Bowl weekend. This is looking like it's going to get ready to go. If you were able, I love setups in here under $33. To be honest, 33. You're a dollar out of it now because of the rally. But if you're able to pick that up, that's wonderful. 34 is not bad either. The reason being my target is 40 even. So that is significant money. It has the power to do it. It's your leader year over year. This thing is up a massive amount since last February. This thing's up. It was $11 then. Today it's 34. That is a monster three bagger. And this position really came to life starting in June. Again, breakout over a former area, overbought. That's when you knew this SHIB was off to the races June 2nd with a 14 handle, essentially. And the chart is beautiful, absolutely beautiful, even with the breakdown that we've had in the last 2 weeks. That's okay to me. This got way too hot. What's the RSI that it peak at right here? 83. That's just that's quite high, especially given that you were there for 2 weeks. So SILJ looks great. You can buy it right here. It's 49 cents ATR. So you can also do it right here. Have a stop loss at 98 cents. You can make the math easy. You make it $1. Chase it right here. If it goes to 33, get out and try again later. But to be frank, I do believe this will be at $40 in 2 to 3 weeks. I will try and put, again, the way the turtle positions work is you need to buy a 1 month high. So I will not be able to get in unless it's going to be straight momentum, and I get into new highs, considering this was struck on January 26th. So I am going to be, a late player in this, possibly entertain it in a different system, as metals is the story of 25 and 26. But this looks great. If you're in silver, the metals are percolating now. Number two, more metals. Number two trade of the past week, it's gold. up 9.2%, or just a touch under 2% a day. That's what it's doing right here. All-time high for the shiny, precious yellow metal, 510 at January 29th. I still can't believe, I'd rather be lucky than good. I got out, no joke, at like 504. Thank you, Mr. Turtle. And those same ATR rules I'm spitting at you now. So just recognize them. You don't have to lose money unnecessarily. The market will do that for you other times. Right here, GLD. Love setups under 444. Yes, I know it's trading 464, but it can be volatile. Gold looks absolutely great. They're not letting go of their gold. Look at the chart. Look at the chart. You see this 200 moving average? That's just up, up, and away. That is an Olympian just going up the stairs. You're not going to catch them. They're gone. Okay, that's gold. Left the station, and it's been left the station. I would say like 2024. My target for this is 485, 490, right around there. I think it's going to base this week. If you're able to get the entry around 445, 447, literally right around there, absolutely amazing. And if you want to chase it right here, ATR is 334. So boom, bang, bang, 668. So you can get in right here if you like. If it drops on you about $7, so to 457 half, right around there, get out. But it is probably going to 447. You get yourself a better basis, a better entry. And that is it for gold, your second best play. Otherwise, in terms of options, derivatives, you could do the May 485 or 490 calls. Check those out. There are going to be, pretty expensive, of course. I would sell some FEBs against it to help finance that trade. Next, third one, and I am in XLE, so I am enjoying the gains in this through correlation, of course. XOP, the oil and gas explorers and producers, up 8%, or just a touch under 2% a day today. It's up basically flat. That is a new 52-week high on that. Look at the sheer resistance here. Each bar is a month, and there has a wall of resistance here as I zoom out on a longer time frame here at 157. The highs all the way back from here, June 2014. This was $336. Am I seeing that right? And that's why some folks love energy. There's so much upside if capital does flow into it. If you can't say, oh, I don't know, bid Google and make it a $9 trillion company. It's already, I think, like 3 or 4. So you can only bid things up so much. Capital does have to rotate elsewhere. And just a beautiful chart. And again, same thing right here. If you really want it to be late, overbought, break out of a former area, it tested you immediately. It went from 140 to 135. You probably would have got out on the ATR rule. That's fantastic. And then you went right back up to new 52-week highs, which you are today. Really, really decent looking chart here. I wouldn't want to personally chase it. I'm not letting go of any of my XLE at this time. I'm letting go of XLP to get into JETS and KRA. This just got a little bit, for me, a little bit too hot. I think this maybe has a move over the next 2-3 weeks to 138 or so, just what the charts look like to me, and that would make sense as the area of the breakout. Maybe a little higher, probably closer to 140 actually. So don't want to sell it. I'm glad I'm in it, and that's all for that. Top 3 losers of the past 5 days. We're going to turn this into the crypto show, unfortunately, for all my hodlers out there, hodlers, whatever you want to call it. There's other words, I'm sure. IBIT down 10%. I was watching this one over the weekend, and I saw the Backstreet Boys, Coinbase song, and a lot of people were saying, wow, Bitcoin's maybe 70,000 too high after that. And they were really sad. A lot of groans after that commercial. October 6th, IBIT peaked, at $72. And yes, you went to a 52-week low of $35 just 4 days ago. And now we're finally overbought. We were talking about getting a dead cat bounce. Let's go strictly through IBIT, because I said it's going to go higher first before it goes lower. I did write an article. Join my LinkedIn newsletter if you're not reading it, which goes more in depth with all this if you can't watch the videos. I was talking about a July bottom for Bitcoin, right around 55K, based on an overlay from the Q2 2022 when Luna and Celsius blew up. There's a lot of similarities in the crypto weakness, as well as the altcoins and Coinbase and Strategy, of course. It's all correlated. But I'm seeing through the charts here, this looks like it's going to bounce to about $46. Full disclosure, I do have a sell on this at 48 so that I can roll it into GLD, the undisputed leader of the past, you name your time frame, of the past 2 years we'll go with. But I think this bounces to 47. You always got to be careful of when things are so stretched the other way, because they can ping pong all the way north, if that makes sense. So again, this thing broke down at 47. I'm seeing the reason why I'm attracted to that 46 is it's the 20-day moving average. I don't think it should be. I mean, Bitcoin's been pretty pathetic. That's a monster move. I do think you get to about 46, maybe 47. I think they're going to rug pull it. I don't think this gets another leg and you're going to see 150 Bitcoin immediately. I'm sorry. And that's going to equate with right around, what is that? It's like, I'll just pull up Bitcoin really fast for fun and giggles here. Yeah, right around 81K. So I think it's going to be a monster rally, as it were. I mean, we were just looking at, 60 and a half on 3 days ago, and you would get to about 81. And then I think they pull it, unfortunately. So that's pretty much it in terms of IBIT. I mean, it's not really the strongest area. You could buy calls and stuff, but I'm telling you, you're not going in an area of relative strength. We opened the show talking about gains in Australia, Japan, and Canada. It's not, software correlated Bitcoin. Apologies. So that's it for Bitcoin. We're going to shed a little bit more light on the next one. Ethereum, I am still short because my level didn't get hit, and this has been a wonderful position. I might be getting out of it in the next day or so, though, Ethereum, and close out. As I said, I'm going to rotate into long jets and regional banks. But Ethereum, basically same returns as Bitcoin, down 2% on average a day. Today, reversing down 3%. That's what you want to see. You want to see these candles. Here, they really hated it. Down 7, down 13. Not good. Still hate it. Down 14. No bueno. And then now, okay, up 10, up 3. A little bit more constructive. For ETHA, I do think this potentially bounces all the way to about 20 even. So for all you, that's dollar signs are flashing, because that's a huge move from a $16 stock to 20, 25% in common alone. So if you're crazy, you could do call spreads on it, or you could buy the 18 strike May calls. I just think the dealers know that this is going to have a rough time, so they're going to sell you that junk for a while. If you want to take a chance, to me, I would just buy the common here, or Ethereum itself through Coinbase, like that. But this is finally not oversold. This was quite a deep plunge. The likes of what we had, back coinciding with the SPY 52-week low, and back when it had its ugly February and March. So we'll see what happens. I think, like I said, this is headed towards $20 over the next 2-ish weeks. Probably is going to be frustrating. Probably not going to be a straight line. And now, something that is not crypto, our last ticker of the D, cloud computing. This one's gotten it taken on the chin. This is wow. This is horrendous. Crypto and Ethereum at least peaked. This is important to understand. Peaked in August, October, somewhat recently. Cloud computing, and I'll tell you what's in this fund, peaked last Valentine's Day at $41 and has just basically been going lower since. And the 52-week low 4 days ago took out the 52-week low when Trump was going crazy with the tariffs. So that is important confirmation. We are still oversold in this. Let me look what's in this hunk of junk. I'm guessing this is Salesforce, Monday.com, the lifters that are really crushing it in today's economy. Let me see. All right, so this is kind of an equal way. It's MongoDB, Confluent, DigitalOcean, SEMrush, UiPath, Fastly, Twilio, Bill Holdings, CrowdStrike, Palo Alto. A lot of weakness. I see a lot of 52-week lows in this list. Samsara, Internet of Things, Palantir, Okta. Ugh, don't love that. Not a fan. So looking at the chart here, it's just gotten its teeth kicked. So obviously, like Ethereum and the others, this probably has a dead cat bounce as well. 52-week low looks pretty decent place for support. There's a wall of overhead resistance at 34.75. No one wants this going back to the mid-January levels. Nobody's interested. So over the next, 2 weeks, this probably hits the 30, half to 31, and then you sell it. And because it's so beat down, that's, what is that? Right now it's $28. Yeah, it's $3. So a little bit more than 10% rally, if I have that math correct on this hunk of junk. And then I would probably give it away. 75 cents ATR. You could chase it right here. If you're down $1.50 on it, though, let it go. Elsa Frozen style, because this thing probably goes lower. Not over a 50 RSI, by the way. since, when was that? Since it was above its 200-day moving average January 8th. So exit stage right on this group. And like I said, the constituency, it's just not the time. All right, top 3 trades of the past 5 trading days. If you've been short IBIT, short Ethereum, short ETHA, and long SILJ, the silver junior miners, congratulations. You're absolutely crushing this market. Like I said, I am selling staples probably right after this. I hit end video to enter JETS and KRE. I'm probably going to close that Ethereum short as well. I'll check the updated ATR and last price. We'll see you Wednesday. Peace.